Good morning, traders. So this is our second video of the day. We've been experiencing a lot of questions about this USD currency scanner breakout. And I know we've had a lot of questions internally. I've had a lot of questions myself as well. So Mike and I, we went ahead and went through a lot of the math behind this actual breakout. And we really wanted to measure it from the previous breakout and see if we can see any sort of similarities between the two. So obviously the best way to do that is from this past data. So let's flip back. So this is the currency scanner as of right now. Here's our move down. This is the breakout that's really in question right now. And so far, it does look like a real breakout. Obviously, I've been questioning it lately. I've been feeling like, hey, is it real? Is it not? So we wanted to put together this video to hopefully help explain a lot of this. So let's start by flipping back to 2008 when this breakout happened. So during this downtrend, we started with how many days? How many days was this trend from start all the way to finish? That number is 842. This was an 842-day move. That's from the start of the trend all the way to this breakout of the trend down here. Now, during that 842 days, it also moved 3,577 units. Now, this is a currency scanner, so it's 3577. It's not exactly pips, so we're just going to call them units for ease of purpose here. So we went 842 days of downtrend, and that moved 3,577 units. So just to give you an average there, that's 4.24, it's just about 4.25 units of measurement per day that fell. On average, it moved 4.2 per day that entire way down. So all we did there was 3,577 divided by 842 to get that. The reason that that's significant, let's flip back to the current market. So if you take this entire trend, we moved in 482 days, kind of weird numbers there, right? But 482 days, we moved 2,281 units, which on average, that comes out to 4.74 units per day. So very similar, right? We moved about the same amount of units per day on average, and then the breakout happened. Now the breakout happened back here, right here after 482 days, and then now we've experienced this breakout most recently here. And I did not expect this, obviously. I expected it to continue in a downtrend for a little while, but obviously we've had this breakout now, so now we need to put it in question and try to predict what's going to happen next. So essentially, guys, what we're predicting here is, will the stock market crash? Well, if this breakout happens and it's like the previous breakout, then it should crash, right? So let's talk about when 2008 actually crashed. So we're back to 2008 here. So now I want you guys to notice we've talked about this several times, but we haven't talked about the exact date. So real quick, just to give you that exact date, Google says September 29th, 2008. September 29th, 2008. So let's flip back to the currency scanner. So the currency scanner says it broke out here. Well, that's July 29th. Wait a second. We said September 29th, right? July 29th. So the currency scanner actually broke out 2 months prior to the stock market crashing. Now, maybe that was significant for you guys. I know it was significant for me. I really haven't done the math all the way through on this because we haven't had this breakout, so we haven't necessarily needed it. So it's been a long time since I've taken a look at this. I thought it was 2 weeks that the currency scanner showed us prior to the breakout. It was actually 2 months. 2 months. Here's the breakout, and here's September 29th. So I've highlighted this box. This is our breakout prior to the crash box, if you will. So we moved from this low to this actual breakout stock market crash candlestick. That was a total of 62 days exactly. Now I know 62 is a Fibonacci number. Don't freak out. I won't even mention that, I guess. Let's not mention that again. Now the 62 days from this breakout to the actual crash is the distance in days and time spent. But you can see, look at this movement prior. We had a big move, big retest, Now, some other significant things here that we found. So we had a breakout. This is a long-term Fibonacci that I have in here. You can see the red up on top, and you can see the green down low here. Now I want you to notice it actually moved all the way up, touched the 61.8, moved all the way, and you can see my Fibonacci is a little bit off here. There we go. Let's just adjust it slightly. So touched the 61. As soon as it touched 61, what happened? Popped all the way back through to the 38, stopped, through some spinner candlestick, stock market crash, and then a giant move, right? The US dollar stock market crashes, US dollar influx of a whole bunch of US dollars, people pulling their money out of the stock market into put it back into USD. So what happens to USD? Skyrocket, right? So we had 62 days prior. So we did a little bit of math based on this 62 days and based on 842 days. So I'm going to try to review that math. Don't get too confused in the numbers here. Let's focus on percentages. So I'll go ahead and do that real quick, that math. So we have 842 days, and we're going to go ahead, we're going to take 62 days and divide that by 842 days. Now what this is going to give us is just a percentage, right? It's a percentage of 62 into 800. So it gives us that length of time, the breakout, from the breakout to the actual fall. And I want to know what percentage of that fits into the long trend, right? So there's our number. So do you guys remember what number was here on the long trend? It was 482. So I want to times my new percentage by 482 and see how many days that gives me. So we'll go ahead and multiply this percentage number by 482. Now that's going to give us 35 and a half days essentially. So 35 and a half days from breakout. Let's go ahead and do the math on that. Now you can see I've already kind of boxed and laid this out right here the same way as this was laid out with our new math. So 35 days plus from 425, so 425 plus 35 days comes out with our math to 531. So whether it's 531, 530, or maybe 6/1, which would be June 1st, right in that range is where our assumption should be if this pattern holds true. So this would be our move towards the 61.8 that we're experiencing right now, towards this high of the 61.8, a retest towards this 38, maybe some consolidation, and then a breakout. Again, back to the same pattern. Here's our breakout move to the 61, here's our retest, and there's our breakout candle. So what that would look like on a younger time frame is something like this. I went ahead and ghost patterned this just so we have some sort of idea of how this should lay out. So here's our breakout move that we're experiencing now. I would assume that we're going to just go directly, if we follow the past history, we go directly to here. I threw a quick head and shoulders here in the high, retest back down, sits on this support, comes back down, double bottoms, and this would be the breakout day. And once that breaks out, if this same pattern holds true, if we do have that stock market crash, guys, we're going to have tons and tons of opportunity to absolutely capitalize on this market. Now, obviously, unfortunately, if that stock market crash happens, there's a lot of money that a lot of people are going to lose. And that's, part of the market swings is when one market goes up, the other one tends to go down, right? Pocket to pocket trading here. So when we move the money out of the stock market, it lands in US dollars, big move up, and those US dollars just skyrocket. So if that same pattern holds true, the assumption is that not only will it skyrocket to this point, but if this pattern holds, it actually went way through the highest high there. And in this case, it would be, way up in this range, even farther possibly. So that's what we're seeing here on the currency scanner. That's what the math shows. If we have any sort of opposing separation position or reverse position, if this is not the breakout, what we should see is a breakout of this 38 and getting back down into this range, and this would be a fake break. Now, everything that I've just went over is opposing a lot of the things I was thinking, but hey, this market is showing very similar to what we were looking at prior. So a move to this high, back down, retest, and that will be the decision-making day. Not D-Day, but the other version of D-Day, decision-making day. So guys, watch for this. Most likely, I don't know how tradable this market will be in between here and there. I'll try to keep you posted between now and then, but I'm very much looking forward to a possible positioning opening at this point, and there's a lot of money to be had if you're trading currency. This is why we do what we do. So if you guys have any questions about this, or more importantly, comments about this, I would love to hear it. I'd love to hear some feedback, any additional information. I'd love to do it, and I'll try to do follow-up videos on this particular subject between now and the 31st. We'll see how close this pattern holds true. And just to give you that pattern one more time, so you can keep in mind what I'm looking at and looking for, that's there it is right there. So good luck with your trading, guys. And as always, I wish you the best. And if you have any questions, give me a call. Thanks, guys.